If we look at this problem, the multi-step should show the net sales, cost of goods sold equals our gross margin. Then from there, we've got our operating expenses, which would be our selling and ad expenses. Our general and admin expenses give us our total operating expenses. Then we've got our income from operations. After that, we've got our other revenues and other expenses, and ultimately our net income. Now, this exercise asks us to prepare a income statement that also shows percentages of net sales for each of the components. So as you see here, all we're doing is if net sales is 100%, so you're going to make your net sales 100%. All you're going to do is take each one of these accounts and divide it by net sales. So for example, if we take for 2014, 234,948 divided by 525,932, what do you get? Should be 44.7. Every single one of these numbers divided by your net sales. For 2014, that number will be 525,932. But for 2013, your 100% is going to be the 475,264. What this shows is a relationship between various costs or various net income or various categories and your net sales. So if you look at cost of goods sold. In 2014, they were 44% of net sales, but in 2013, they were 36% of net sales. That's a big jump. Was that because they maybe had a higher cost in the product and they didn't pass it on to the customer? Could that be people took advantage of the discounts greater? Who knows? But this is all information that's useful to users of the financial statements. Does that make sense, guys?
Yes.
So the key here is, and this is a significant key, if you look at net income to net sales, do you see net income of 110,478, divide that by 475,264 is 23.2%? Look what it is in 2014. 12.1. That is significant, isn't it?
So do we want those percentages to be low or high?
It depends. Basically, what you want is to compare figures
From 1 year to the next.
from 1 year to the next. So again, of course you want your net income to be higher, but the figures all are a benchmark for comparing. So if I look at this, I'm going to look at, wow, I mean, for the net income to jump down from a net income of 23% down to 12%, that is significant. And if you look at it, a lot of it's in the cost of goods sold. Okay? A lot of it's in the cost of goods sold. Look at how the cost of goods sold went from 36 to 44%. That's significant. That's 8 points. Now, also, if you look at our general administrative expense and our operating expenses, both of them jumped, one 3%, one 2%. So this is showing me that they either didn't have a handle on their costs, or the market's more competitive, could be what it's telling me too. And they couldn't mark those products up like Best Buy can't. But there's clearly a variance here between 1 year to the next that I think could cause concern. It may make total sense why. They might have explanations to account for all this, but it is significant. Does that make sense, guys? Okay? So, if it's okay, I'm going to put all these up, but I'm going to move on to the next problem, if that's okay with you guys. Okay? So now let's look at problem 2. I'm not going to do 2. We're going to skip 2. Let's look at problem 3. We are going to need to prepare journal entries to record these transactions. Okay? The first one says to us, sold merchandise on credit to James William, terms net 30, FOB shipping point. It's telling us it sold it for $3,000, but it cost us $1,800. So let's talk about this. What do you think we're going to need to do here, guys? Let's talk it out. What's it telling us? Did he give us cash? Credit. So accounts receivable is the debit. What's the credit?
Merchandise inventory.
Not yet. Sales.
Cost of goods.
Not yet. The first thing we're going to do, guys, is we're going to show the sale of the products. So we're going to start by showing a debit to accounts receivable, a credit to sales for $3,000. Then, Celeste, we're going to do a debit to cost of goods sold and a credit to merchandise inventory for $1,800. Remember, this is a two-part transaction when we sell products. We have to show the sale, and we also have to show the cost to show it, take it over to cost of goods sold, and to reduce our merchandise inventory, don't we? Does that make sense? How y'all doing? Okay, the next one says to us, purchased merchandise on credit from Leverage Company, terms net 30, FOB shipping point $6,000. So, guys, we're not selling it here, we're purchasing it, okay? We're purchasing merchandise for $6,000. What are we going to debit? Merchandise inventory. What are we going to credit, Celeste? If we're purchasing something, yes, accounts payable is our credit. So we're debiting merchandise inventory for $6,000. We're crediting accounts payable for $6,000. Does that make sense, guys? Next, we are going to show we paid Leverage Company for shipping charges on that merchandise we purchased on March 8th. Now, when we pay shipping costs because we are purchasing goods, we're going to have to include that into our inventory. But the way we include it is we set up a category called Freight In. Okay? So it's an expense or a part of our inventory. We debit Freight In for $254 and we credit our cash for $254. Make sense, guys? Next, it says to us, we purchase merchandise on credit from Rourke Company. Terms net 30 FOB shipping point for $9,600, including freight costs paid by Rourke. So this one's a little tricky. The $9,600 includes $600 of freight cost, okay? So what we'll do there is we'll show $9,000 as merchandise inventory. We debit $600 for Freight In, and the whole amount will be in accounts payable, won't it?
Yeah. How did you get?
That one's a little tricky in my opinion.
Oh, so we just broke it down,
Correct.
and then in the credit side,
The credit's the payable, but that $9,600 it's telling us included $600 in freight costs. So we're showing, okay, if we paid $9,600 and $600 included freight, then that means $9,000 of it was inventory. Make sense? Is that a little confusing? Next, it says to us, sold merchandise on credit to Deepak Sony. Terms net 30 FOB shipping point. We sold it for $2,400, but it cost us $1,440. So I want you to look at the March 7th transaction, and I want you to try it. Okay? Tell me what you guys come up with.
It's gonna be the same thing like accounts receivable and,
Yeah?
but we're gonna start with the 2,400 and then
$2,400 is the debit to accounts receivable, credit to sales, and then our debit is going to be cost of goods sold, credit to merchandise inventory, isn't it?
right, you gotta handle each one of the numbers.
Yes, that is totally correct. Okay? Let me know when you're caught up. Then next it says, returned damaged merchandise received from Leverage Company on March 8th for a credit of $600. So we purchased some product that was damaged and we're returning it. What are we going to do then, guys? Debit what? Debit accounts payable. And what are we going to credit? Merchandise inventory. Perfect. So you're going to want to debit your accounts payable of $600. You're going to credit your merchandise inventory for $600. Next, it says, received a check from James Wilson for his purchase on March 7th. What's going to happen? How much are we going to get?
No.
Debit cash, $3,000. Credit our accounts payable of $3,000, aren't we? Credit our accounts, did I say accounts payable? I'm sorry. Credit our accounts payable for $3,000, aren't we? Credit our accounts receivable for $3,000. God.
It's been a long day, huh?
Oh, Fred. It's all a good problem. I'm alive. So one thing with taxes, every year I get all these people that shockingly die. And it's just a reminder of how good it is to still be living. Okay, next it says, sold merchandise for cash, $1,800, and the cost was $1,080. Now I want you to think of that and let me know what you think we need to do.
Cash.
Debit cash, yes! What are we going to credit? Yes, sales! Then there's another part of it. What are we going to do? Debit cost of goods sold, and what are we going to credit? Oh God, I'm just so loving this. Yes.
So the same amount of money though?
No. How much are we going to show? It says here, We sold merchandise for cash of $1,800, but it cost us $1,080. So what are we going to show our cost of goods sold is and our merchandise inventory?
So
$1,080. That make sense?
right, so we put cash and a sale, and then we're gonna do cost of goods at 1080.
Yes.
And merchandise inventory at 1080,
Perfect.
right?
Totally, yes, correct.
Will you show how
I'm sorry. So we've got our cash of 1,800, sales of 1,800, and then the second part is cost of goods sold 1,080, a credit to merchandise inventory for 1,080. Make sense?
I gotta be honest that those sentences,
Or confusing?
yes,
I agree. That's why, since I've done it before, I kind of know where the issues are on this. And I agree with you totally. Then, are y'all ready for the next? Next, it says, paid Rourke Company for the purchase on March 10th. So it looks like over here on March 10th,
That was a $9,000.
9,600, yep. And then,
Is it 96 or 9? Because Rourke Company paid the freight.
correct, but they paid it, but we're supposed to pay them back because it was FOB shipping point. So
still 90?
it's still 96.
Okay.
So what we're going to do here is we're going to debit our accounts payable for 9,600, and we're going to credit our cash for 9,600, aren't we? Right? Next, we have we paid Leverage Company the balance from the transactions of March 8th and March 14th. So on March 8th, we purchased merchandise from Leverage, but look what happened on March 14th. We returned 600 of it. So how much do we truly owe them?
54.
5,400. So we would debit accounts payable for 5,400, and we're going to credit our cash for 5,400, aren't we? Right?
Okay. Yep, that's what I
We're getting close. Now, it says, accepted from Deepak Sony a return of merchandise which was put back in inventory, $200, but the cost was $120. So Deepak is returning goods. What are we going to do there, guys?
Sales returns and allowance.
Sales returns and allowances is a debit. The credit is accounts receivable. They don't owe us that money anymore, do they? And then we have to adjust our inventory, don't we? Right?
See, that's where I still run into problem, is getting the titles like sales and returns and allowances.
And that's where
cost
just
of goods sold.
have them on hand. You don't need to guess at it. Keep a list right available. Okay? And then it helps you just go through it. So basically, I'm not going to worry about P3, or excuse me, whatever P4 was, or P5, because I told you we're not going to deal with the periodic system. Do we want to go over P6, or do you want to try to do that on your own? On your own? So the homework is going to be P1, what did I say? P6 and P3, right? P1, P3, and P6. I'm going to download all of these so you have them for homework, or you have them on the solutions here. And I'm going to say resources for chapter 6. I'm going to download the solutions for you. Okay, and then your homework, I should call it assessments, will be Dropbox, chapter 6, but I'm changing it. It's only going to be problems 1, problems 3, problem 1, 3, and 6, okay? So complete problems, problem 1, problem 3, and problem 6. How are you guys doing?
Nancy, how long are you going to keep the test open?
Excuse me one sec.